Welcome to Illuminati Silver. We tell you the truth about silver. Today is Saturday, the 12th of November 2022, and we're publishing our gold and silver weekly update for the week ending the 11th of November. Now, before we look at this, my sincere apologies for there being no report last week and no notification warning you of this. So let me explain what happened. The past few weeks I've been recovering from COVID, and 3 years ago I'd booked a cruise holiday with my wife to see the Northern Lights in Norway. This excursion had been delayed twice because of COVID restrictions, and it was touch and go whether I could go on this one. The COVID cleared literally within days of the proposed cruise, and so I naturally assumed that I'd be able to produce the update while on the ship and upload it to YouTube. I could not be more wrong. Not only were we without internet access for quite a few days, even when we did have it, it was intermittent, and it would also, even when we had sufficient time, not allow a file upload to YouTube. Clearly, there had either been not enough bandwidth, or the cruise line prevented this access to this particular part of the internet, as there were many sites we could not access, for example, many crypto exchange sites. They obviously had restrictions. So having just got back last night, it was imperative that I explain this in today's video as to what actually happened. And thank you to those who sent emails. And we had quite a few expressing some concerns about my health. My health is now fine. It was just purely the inconvenience of being on board a ship whose internet access was quite limited. Meanwhile, let's take a look at what's been happening to gold, silver, equity markets, and the US dollar. Gold last week rose a significant $89, rising from $1,682 to $1,771. Having hit a high of $1,773, so it closed just $2 below its high, and a low of $1,665, a rise of 5.3%, which for gold is quite considerable in a week. In sterling terms, gold finished the week at £1,496, that's up £18. And in euros, it closed at €1,709, that's up €22. Silver rose 86 cents, rising from $20.86 to $21.72. Having been as high as $22.06, and 22 is quite a crucial level, but it needs to be sustained, and a low of $20.39. So a rise then for silver of 4.1%, 1% difference compared with gold. In sterling terms, silver closed at £18.36, that's just up 2p. And in euros, it closed at 20.99 euros, that's just up 4 cents or 0.04 euros. The gold to silver ratio stands at 81.5 to 1. Now, the difference between gold's high and low was a considerable $108 last week, so there's quite a spread, much larger than usual. And the difference between silver's high and low was $1.67, slightly higher than usual, but not significantly so. Now let's take a quick look at the other financials. Bitcoin currently stands at $16,836, almost $4,000 lower than 2 weeks ago. And the whole crypto market have actually been taking a hammering this past week because of the filing for bankruptcy of the FTX crypto exchange. Equities were stronger this past week. The Dow Jones closed on Friday at 33,747, up 32 points on the day, and up 886 points on the past fortnight. The S&P 500 closed at 3,992, up 36 points on the day, and up 91 points on the past fortnight, and the Nasdaq Composite closed at 11,323, up 209 points on the day, and up 221 points on the past fortnight. Oils were higher on Friday, but were very similar in price to their close 2 weeks ago. Brent crude closed at $95.99 and WTI crude closed at $88.96. The dollar index stands at 106.29. Now, when you compare this with 110.75 2 weeks ago, it's down a substantial 4.46 points and accounts primarily for the brunt in the increase in the price of precious metals, which we shall cover in more depth very shortly. But first, let's take a look at the economic news or data announced these past 2 weeks and what we can expect this coming week. Okay, before we look at last week's economic data, it's important, because we were away last weekend, to look at the previous week's data and what that actually revealed. And we can see that the Chicago PMI was lower than forecast. The manufacturing index was marginally above forecast and the previous month. The ISM manufacturing index similarly. However, what is of interest, particularly to us, was in fact the services index was lower as far as the ISM index was concerned, but the big one was in fact the non-farm payrolls, because although the non-farm payrolls report showed a higher number of jobs, 261,000 compared to expectations of 205, that figure was lower than the previous month. But the key thing here is the unemployment rate, which was actually higher at 3.7%, with wages rising, thereby suggesting some potential pressure on the economy. Now, if we look at last week's figures, this is then fed through. In what way, you may ask? Well, let's take a look. Now, the most important data on the previous week was in fact the FOMC's announcement on interest rates. And whilst the Fed funds rate rose by 0.75%, in other words 75 basis points, from 3.75 to 4, the statement afterwards and the coverage thereafter suggested that perhaps the Fed was going to be slightly less hawkish moving forward. Perhaps they had knowledge of the unemployment rate rising on the Friday. Now, if we take a look at last week's data, we can see that consumer credit for September was down compared to expectations and down from the previous month. We, of course, had the election day on the Tuesday, and on Wednesday wholesale inventories, but what captured our eye, but unfortunately we were unable to report on it because we were on a ship without appropriate internet to upload, was the consumer price index. And it is clear here that these figures had the most impact, particularly on the dollar and precious metal prices. Why? Because the CPI monthly change came in at 0.4% and there were expectations of 0.6%, but the core CPI came in at 0.3% for October against expectations of 0.5% and against the previous month's figures of 0.6%, thereby suggesting, and it's only suggesting, it's 1 month's figures, that maybe the peak in inflation has now been reached. And we now have a CPI 12-month change of 7.7% compared with 8.2% the previous month, and a core CPI figure of 6.3% compared with 6.6%. Now that is extremely encouraging. And we can look at the gold price and you can see what happened. Because on that Thursday, the gold price jumped from $1,700 basically to almost $1,771 by the close on the Friday. But on the Thursday, there was an immediate jump within what? Have a look at this. Maybe an hour to 2 hours maximum of $50. which for gold is quite a significant leap in such a short period of time. Now, what have we got coming this following week? Well, we have the Producer Price Index on Tuesday and the Empire State Manufacturing Index. The one of interest really is Wednesday's retail sales figures. The reason being is that if these figures are lower than expectations and reasonably lower, then that may support the Fed's apparent view that whilst they still need to be strict on inflation, they need not necessarily for December be as strict as a 0.75% interest rate rise, and they might get away with a 0.25% or a 0.5% rise. So we'll be watching out for that one, because that will have a bearing in our view. Of course, we have the initial jobless claims, and then on Friday, existing home sales and leading economic indicators. So the important one for us, we're looking at the Empire State Manufacturing Index, but the important one will be the retail sales figures, if they vary considerably from expectations. Now, clearly, last week's dollar fall, which was the largest weekly drop in 2022, had the most significant impact on gold prices, and similarly silver too. Futures contracts for gold's December contracts showed gains of almost 5.5% at one point, and analysts point out that 78% of gold's rise is directly attributable to dollar weakness, and the remaining nearly 22% to market traders bidding the prices higher. Now, from a technical point of view, gold reached both the 50-week EMA and is hovering around the 200-day EMA. Gold needs to break through this, and if that is actually achieved, then 1800 with eventually 1850 within sight, should the bulls then decide to re-enter the market, will be achieved. If, however, we see gold fall back below 1750 and not sustain this recent rally, then whilst 1700 may hold this week, should we get down to that level, and we're not saying that we definitely will, but should we get down to that level, we will soon be back into the mid to late 1600s again. That said, all things being equal, many traders are viewing gold as being more positive than negative over the next week, and especially if the retail sales figures are disappointing, which therefore suggests the Fed will not be quite so hawkish. The crypto market imploding because the crypto exchange FTX filing for bankruptcy may direct existing and potential investors for the crypto market to reconsider their portfolio and decisions more in favor of precious metals, because as we've mentioned many times before, a reasonable amount of money that perhaps could have gone into precious metals were finding their way into crypto over the past 2 years. Silver, like gold, had an encouraging week, and even 2 weeks really, with that key resistance level of $22, which we've mentioned many times previously, being the crucial level for silver to break through and hold before we can expect to see silver start rising back up to the mid-$20 again. Whilst we factor this as a possibility, we cannot help but think that the rally in precious metals, and especially silver short term, may be just a little overdone. If the economy is actually weakening, then we shall see a decrease in the physical demand for silver, or at least the industrial demand for it. And if the economy is strengthening, then the Fed will not be timid on interest rates moving forward, which will act as a severe headwind for precious metals. Now, we're of the opinion that this next week or two may indeed be a little erratic. There is the possibility that the Fed may increase rates by only 0.5% in December rather than 0.75%, which ironically may still please markets, but inflation even running at 7.7% shouldn't please any market, and it's nothing really to celebrate, and is extremely wide of the FOMC target of 2%. Now, that said, though, we may see some follow-through on Monday, with the determining factor for next week, in our view, being retail sales on Wednesday. So in what could be a short-term turbulent precious metal and US dollar value market, we envisage that gold will broadly trade next week between 1725 and 1825, but more likely sort of in the middle of that sort of range, with 1700 to 1850 as outliers, though we will be surprised if it does go as high as 1850, quite frankly. And silver trading between 21 and 22.50 and 2025 and 23 as outliers. Again, we expect the brunt of the trade to be in the mid 21 to early $22 level. But of course, silver has a larger sort of discrepancy between highs and lows, which is why we say 21 to 22.50 and 2025 to $23 as outliers. Now, what do you think? Please share your thoughts. Let us know if you agree or disagree with us. Yes, precious metals have risen these past couple of weeks. We were expecting perhaps less of a rise, in fairness, though we did point out there could be a rise, and we were a little more bearish than has actually happened. However, we also think that this rally, whilst it could continue, is rapidly reaching its extent unless something significant happens, either geopolitically or financially. Now, we are repeating this video again tomorrow under a different banner and headline, so obviously if you've listened to this one, there's no need to listen to tomorrow's. And I would like to thank you for listening. If you haven't done so, do subscribe to the channel. We will be changing its name soon, and we're taking on board the recommended names that people have put forward. And before we actually go ahead with a full-blown change, we'll make some suggestions to you. And please press that bell sign so you're notified of our videos as and when they're published. And as always, we wish you a safe, enjoyable weekend and prosperous week ahead. Illuminati silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.